Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Wednesday, May the 19th. The year is 2021. Let's talk trading. Place your bets. Part 3 with Walmal. This video is for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, back to placing our bets. I just told you had to do something. I was in a meeting and I should have placed my bet on for the 4060 GU Express.
Yeah, it's kind of funny, how that would have worked out well for you. And that's the thing with placing your bets, and just, you would have had a perfect opportunity where you could have gone and take the bet, put your stop loss in, put a TP in someplace, and walked away and come back with a big smiling face. Doesn't always work out that way, but it would have been really nice to do that.
I know, it would have. And well, even this hour, just placing the bet at the 50 line on the long.
Yeah, that would have been a really nice trade, because that was obviously the Walmart line for this hour. And the nice thing about it is it went above it, it came back down, they tested it, and it broke through and got to the bottom side of it. And then when it came back up, the nice thing about it was it went into slight profit of only maybe a half a pip or so, then went against you maybe, 1 or 2 pips, not even, and the next thing, then it exploded, and you would have gotten out with a, 10, 11 pips. Would have been a really nice trade. Yeah, you would have been, underwater there for a little bit, but you're only underwater by 1 or 2 pips. And if you got your trade management in place, you got your risk management in place, you never really should have been sweating in any way, shape, or form. Would have been a really nice trade to take that.
Yeah, and I think that's just something that the boys and girls and non-binary traders out there, if they focus on a single method that pays off, and they set the rules just like they were a casino, and they took those opportunities when they appeared, and then you would see that these things will pay out. Are you going to lose? Yes. But like in this particular hour, if you would have taken a trade every time the price crossed the 50, say on an M5, you would have had 2 trades.
Yeah, and that's the thing. You would have had lots of opportunity here. And you think about it. You go back and you look statistically, and you know that you're going to win on these trades. It just shows time in and time again. And you think about casinos, and casinos are, they're making bank on only an advantage of maybe 4 or 5%. That's all they're making, is an advantage of 4 or 5%. And they're obviously doing very well. We're going and seeing something where we're seeing advantage of a whole lot more than 4 or 5%. The problem is, and this is why traders are not successful, this is why traders lose, is because what happens is they take, let's say they take out a success rate of 4% better. Okay, what that means is that you're winning 54% and losing 46%. Well, the problem is, where traders start to lose money, is that what happens is that they're not going and following their rules, and then taking big losses. They're moving stop losses. They're not taking pips off the table when it makes sense to take the pips off the table. They're not taking the trades when the trades appear. And then on top of that, the fine tuning of all this is, we talked about this a lot, about this idea of looking left, going and looking and saying, hey, you know what? I got a Walmart line here, and there's nothing but wide open space above us. Man, that's a good opportunity. My next opportunity next place where there's going to be a point of interest, and there's going to be some heavy resistance, is all the way up at 66, and I'm taking along at 50. You know what? I got a good chance this thing's going to go all the way. And not taking those opportunities. Or the other thing that happens is, let's say the trade was happening at taking along at 50 again, but we looked to the left, and all we saw for the last 3 hours was banging its head against the wall, at that 50 level. But why would you take that trade? It's sort of like, and that's where I think traders get into trouble, and that's sort of like, is that a bet that makes sense to take? The thing is, as traders, we've got all the power in the world before the trade is placed. We've got everything. We've got our gunpowder to go and make a move. We got the ability to take the trade. We got the ability not to take the trade. It's all up to us. The brokers can't make us take a trade. They can't go and push your mouse button down and make you take the trade. You're the one that has everything. So go and look at the chart and just see, is there an actual trade there? And if there's a trade there that makes sense, take your bet and just see what happens. It may go with you, it may go against you. But statistically, we know that more times than not, it's going to go your direction.
Yeah, that's the truth. It's funny how you said you got your gunpowder. Yeah, and then once you place that, you have the power of when to pull the plug. And if things are going against you, like you have your rule, if you're up 3 and then you're down 3, you're out.
Exactly right. And that's the other advantage that we have over the brokers in that sense too, is that, unless you're obviously coming up against your account size for whatever reason, because you've over leveraged yourself, the broker can't take you out of the trade. Only you can take you out of the trade. So you have the advantage on both the entry and the exit. And that's a major advantage that you have in this game. We always like to go and say, well, the game is rigged. It's rigged against us. Well, it may very well be, because when you think about it, you got to pay spread, you got to pay commission. Sometimes brokers do go and play funny games out there. We've all seen it. I don't think it happens nearly as often as people claim it happens. I think there's just natural movement in the market and people just not playing the market correctly. I think that's more to the point. I know. I'll tease you a little bit. I know you like to go and say those guys, they went and wiggled me out of that trade. No, they didn't wiggle you out of the trade. What happened was the trade just came back on you, and you saw profit going away, and I'm just going to take my profit. And you took your profit, and you were happy when you got your profit, and then when it turned back the other direction, oh crap, I should have stayed in that trade.
Well, the thing is, no, I shouldn't have stayed in that trade, but I say that, but the reality is based on the moment, I did what I thought was in my best interest, which was take what little profit was left and make sure it doesn't turn into a losing trade.
That's exactly right. And that's got to be covered in your rules. It's the type of thing where, are you jumping out of a trade because it's emotion, or are you jumping out of a trade because your rules say, hey, it's time to get out? It's like, I have that. It's an unwritten rule, but it's a rule where price stops. I'm in positive territory. I've got some pips on the table. I've made, let's say, 3, 4, 5 pips, whatever it may be, and all of a sudden, price comes to a dead halt. And it doesn't move. And it doesn't move for 5, 6, 7 seconds. We've all seen it. We've seen it not move for 20 seconds. Well, I have an unwritten rule. If I see that, I'm gone. I just get out, and I just make that a rule, because I just know that at that point in time, the market is either loading up or it's in a point of indecision. Well, if I got money and I've already had the potential of walking away with money in my pocket, and we're at a point where the market's at a point of indecision as to what it's going to do next, that's like placing a second bet on if I stay. Why would I take a second bet? Just go and get out and take your money. Wait for the next opportunity where I'm in control again. At this point in time, at that point, I'm not in control, because I can't control whether or not the market's going to go up or down. Take my money, put it in my pocket, wait for the next opportunity that comes along based on my rules, not the market's rules.
Exactly, but the focus on placing your bets, it's like I call them the market structure guys, or the order block boys, where they basically say, okay, here's my entry, here's my stop, here's where I'm going to take profit. They put the trade on, they sit back, and they wait. Mm-hmm. They either get stopped out or they take profit.
Yep, and that's perfectly fine, because that fits. What does that fit into? That fits into their book of rules, and that works just fine. And we all have to go and put that all in place and make sure it fits into your rule book. And so, it's the type of thing where if I was playing that type of a game, sitting there for 5, 10, 15, 20 seconds, it doesn't matter to me, because that's just not the game I'm playing. But that, or rather that doesn't affect how I'm playing the game. And that's the nice thing about place your bet, and let's see where it runs to, and get in and get out. And I know there's a lot of guys out there who are very successful, and what they do, their claim is what made them successful is they look for those type of movements, and they get in, they let it run, and they get out. And their claim, the reason why they do well with that is because they know themselves, and what they do is they cut themselves short. Meaning, we're supposed to, let the runners run and cut the losers. Well, what they found with them, what they were doing was they were not just cutting losers, but they were also cutting their runners. And there's a lot of truth to that. Where if you're not careful, you can certainly go and do that. So if that's you find that that's what you're doing, place your bet, put your stop loss in, put your TP in, make sure that you're not being unrealistic with your TP, and make sure you're not being unrealistic with your stop loss, and you should do just fine.
Yeah, and the other thing is, once again, placing your bets, and setting up your rules, well, and following your plan is, I know Walmal sticks to his daily goal. He has his one account, he makes his pips, he shuts that account down, he moves on to the next account. He's been doing that for a year. And that's just something that if you have a daily goal, maybe you want to make X dollars a day. You make your X dollars a day, you shut down. You're done. Because all it takes is for you to go in one more time and have that sucker run against you, and you could wipe out, part or all of the profit that you had. And then you got to start over again. And then you're upset, and then being upset, you might do something stupid, and now you might find yourself underwater for the day.
Let me give you a transparency moment, and this goes back probably about a year and a half, maybe 2 years ago. I had made my goal of 10 pips. I think I was actually up 15 pips, and I didn't do that. And at the end of the day, when I looked at the tally sheet at the end of the day, I was down 45 pips for the day. 45 pips I was down. Meanwhile, I had made goal. All I had to do was turn off the system. All I had to do was walk away. But instead, I was down 45 pips a day. And I remember this to this moment. I remember even the date that this even happened on, that, because there was such a traumatic effect on me. It was also a type of thing where what was so bad about that was I didn't trade probably for 3-4 days after that, because it messed with my brain so badly that I just couldn't trade. I just it was the type of thing. At that point in time, I was profitable. I was making money every day. Everything was going well, and here I went and did the most stupid thing in the world. And I said, it's like, you're too stupid to trade. You literally start thinking like that sometimes because of what you've done, and. No, would put some rules in place and just, I made it from that point on. I said, okay, here are my trading rules. This is what I'm going to do, and I am not going to violate it. I don't care what. I am not going to violate it, and that's it. So now what my rule is that I'll continue trading sometimes after that, but what I'll do is, if I'm trading and it's the moment I come back down to hitting to what my core value is, it gets turned off. I will not trade below my core level. So let's say I'm up 15 pips. I'm willing to take up to a 5-pip loss. If I'm up 20 pips, I'm willing to go and take up to a 10-pip loss. That's it. And I won't let it get past that. And, that's worked out very well for me because, I know what motivates me to keep going and what not to do. And I think we all as traders need to go and figure that part out.
Yeah, exactly. It's just, one of the things about placing your bets and looking left, let's say you placed a bet at the 50 line. Well, if you look left, you can see there's this big candle that was over, 10 pips, this big red candle. Well, we call that a return bar. In fact, I've got a return bar indicator or two out there. So you pretty much know price is going to go back to the open. And sure enough, it went right back to that open, and then it stopped right here on the chart on this M5 bar and turned around. And you can see right now it's struggling. So you have an option here. You can say, you know what? You might say, well, if it busts through, it could run all the way up here to the previous H1 high. Or, you know what? I've just made 10 pips on this trade. And depending on what my core for the day is, okay, I made enough off of this trade. let's wait for another opportunity. Because as you can see, price came back down to what, 52.5. So you were up 10, now you're up 2.5. Just think of the emotions that you would have gone through had you done that. And guess what? We're out of time.